Welcome everyone to our SHPE Grad series for March. We have an exciting presentation from Sonia Castellan of the Castellan company, and she owns her own company. And we also welcome Lillian, who is our admin that is here also to assist us. So welcome all to SHPE Grad series. As you know, my name is Ana Rodriguez. I was born and raised in Puerto Rico. I have a bachelor's degree of the Inter-American University in elementary school education and a master's and doctorate degree from the University of Massachusetts in Amherst in organizational development and training. I have been in SHPE since 2019, and my new title is Higher Education and Graduate Program Manager. My contact info, there you will find my email address at SHPE. That is my cell phone number where I ask you to text me first. Don't call me because it will go to my voicemail. I have a lot of robocalls. And that is my LinkedIn information. So if you want to connect with me, please feel free to do so. I'll give you one more moment so you can take a picture of the contact info so that you don't forget and can connect with me. Well, it is my absolute pleasure to have you all here. This is a place where graduate and advanced degree students, which is a community. We meet monthly and discuss a topic of interest. This topic was sent to me by the National Graduate Committee, especially David Reynoso, who's here, where we are going to talk how to fill those taxes, but not tax law. It's about those things that you get. And in this meeting, we have Sonia Castellan, who's an expert, and she has been advising graduate students about how to fill their taxes. So please connect with other graduate students here. I hope you can get some lifelong learning skills in this presentation. Please discuss and share any thoughts on the topic that will be discussed today. And I hope you can continue these conversations beyond this meeting. Listen to what the speaker has to say. There's zero pressure. What you say here stays here. Don't say I'm sorry because this is an apology-free space. We encourage you to participate, but it's absolutely voluntary. And what happens here stays here. Have fun, keep the conversation going. And let me, without further ado, introduce Sonia Castellan, who is a first-generation Latinx tax pro and the founder of Castellan Tax Services. With a background in sociology and over 7 years of corporate experience before transitioning into accounting, Sonia understands how intimidating financial systems can feel, especially for first-gen and BIPOC entrepreneurs who were never taught how money really works. This presentation will provide a quick overview of common types of student income, such as scholarships, stipends, grants, and fellowships. What is typically taxable versus non-taxable, and how these amounts may be reported on tax forms. It also highlights basic tax planning considerations and key education credits students may be eligible to claim. So without further ado, I will stop sharing my screen and leave you all with our expert of tonight, Sonia Castellan.
Thank you all for joining me and all of us. So today, I know it's probably like Tuesday, it's the middle of the week, but just know that we're going to get through it. Especially now, if you guys are already having your midterms or planning to have midterms, and don't know if grad students have midterms, but if you do not, you guys are so lucky because I dreaded those moments back in college. But anyways, I digress. I do appreciate you all joining in today. I'm really excited to be just connecting with you all and presenting you the information. I know that when it comes to taxes, that topic itself is already very intimidating and can cause a lot of headache, but just know that by working with the right tax professional, this stuff can become very digestible and very easy to understand. So my goal is to help you understand this the information in a simplified manner so that you're able to hone in, take in, and use it towards your situation. And of course, if you guys have any questions, feel free to add them in the chat. We will be addressing them right after the presentation. Without further ado, I'm going to go ahead and I'm going to start sharing my screen. All right. Can someone just let me know if you can see
Yes,
my full
we can
screen?
see it. Thank you.
Perfect. So let's go into the topic of the hidden tax route of graduate students or anyone in general who are enrolled in a university or college. And we're going to just be discussing about scholarships, stipends, and what the IRS will be looking out for. Because I will tell you this, there's a lot of things that that's in within the tax rules, but there's a lot of people don't tell us what it means and how to go about with it. So here I am to just give it all to you guys in a simplified manner. So first things first, why is it important to know what type of income you're getting, especially as students enrolled in a university or college? Well, just know that the income that you do receive or earn, not all of it is tax free. And we're going to discuss the misconception behind that. A lot of students who end up earning these income don't realize that they end up with a tax liability. And then when they're filing their tax return, especially now in this season, I'm sure some of you guys have, if I'm not mistaken, have already come across a situation when they filed their tax return that they had a bill and it's causing them a headache knowing like, oh my goodness, I had no idea that I had this bill. So how can I avoid this again the following year, which will be discussed later on in a bit. But we want to make sure that you understand the tax implications so that you're not hit with another tax bill shock, as I call it, because with those taxes will result in penalties and interest on top of that. And so we want to make sure that you guys at least avoid that the following year. And again, my goal at the end of this presentation is to make sure that you guys understand and stay well prepared, especially this season and the following. Now, what type of income do students typically earn? Well, there are four type of income that you might come across during your time in college. One is scholarships, two is stipend, three is research grant, and four is fellowship. And now we'll go into more the details of each of these types of income, but I wanted to let you know that with all of this income that you do receive, it has to be made towards tuitions or towards any research projects that you're working on or anything that will continue to help you on the financial side while you still continue on with your studies. And I will say that each one of them are taxed differently. So let's just dive right into the first one, scholarships. Now, when you guys earn scholarship, the scholarships are to be used towards tuition, any fees tied to tuition, books, materials, anything that you guys need to keep up with your studies. And typically, the scholarships that you do earn are not taxable if you use it towards those items that I have called out. If you end up using it towards a different type of expense, such as rent, food, travel, any other personal expense, then it becomes taxable. And I'm sure some of you guys have already known, like with the scholarships, it had may been put towards your tuition or towards your materials that you had to purchase for your courses. But if you have some leftover scholarship funds and you used it towards any type of, like, for example, for the rent or for the travel, just know that technically you're supposed to report the remaining amount as income on your tax return. I will say this. As taxpayers, you are responsible for reporting an accurate return on your tax return. And the reason why I say this is because every income that you have earned, the IRS just wants to know how much you have earned and if it's subject to taxes. And we'll get into some of the things that as to why you should be doing that, because a lot of people tend to not do it. But I just want to remind you, like as taxpayer, by law, you are supposed to report all income on your return. And I will talk about that as to why later on. The next one is stipend. So sometimes students will receive either a monthly or quarterly stipend that will be paid towards their living expenses or anything that will keep them sustainable during their time in any programs that they're enrolled in college. Now, most of the time, these stipends are taxable. And unfortunately, when you do receive this type of income, there's no taxes being withheld out of your payment. And so this is why it is your responsibility as a taxpayer to set aside funds for those taxes because most of these times when you get these payouts, it's usually is the gross payout, but as always, no matter what income that you have earned, you have to make sure that you set a small portion aside for income taxes. There will be times that you may not be issued a tax form that could be either a W-2 or 1099. You may not get one, but just know that even though you have received income, again, can't stress this enough, it is taxable. And even if your school or any other institution calls these stipends as a fellowship or an award, there is usually a fine print within that clause or agreement. So it is very important that you read that information to ensure that you understand that the stipend that you will receive, will you be issued a 1099 or a W-2? Most of the time, when you do read the fine print, they will have you fill out what's called either a W-4 or a W-9 to collect your information, which is your legal name, your social security, your ITIN. The reason why they ask for that information is because they're likely going to be issuing you a tax for the following year, typically around January or middle of February. They will usually mail that out or email you a copy of that form because that information gets reported to the tax agency, which includes the IRS and the state. So I always tell people when you receive this type of income, just make sure that the income, well, as I said, stated here, think of it like an income as without withholding, but just know that you're going to be owing it at the time you file your tax return. The next one is research grant. For a lot of folks who are usually in the grad program, they tend to apply for research grants where they will help fund their research projects. Now, this really depends how you use it, right? So most of these grants, they would like for you to utilize the funds towards your education expenses. Again, this requires your tuition, your course materials, or any fees that's tied to the school. That typically is not taxable, but if you end up using it for other living expenses or anything that's personal, again, such as travel, food, rent, then it does become taxable. And I always tell people when you do receive these grants, again, read the fine print because you want to make sure that you fully understand what this income is for and how it can be used so that you don't encounter a tax implication, especially again when you file your tax return the following year. Another one is the fellowship. Again, this is mostly used towards your study or your researches. Again, there are some rules apply. I can't stress this enough. Usually the treatment on the fellowship has to have a purpose of the money. So if it's used towards your tuition or if it's used for room and board, or if it's used towards you traveling to study abroad, like that is then not taxable. But again, if you use it for anything that has even a personal hint of an expense, then it becomes taxable. And again, you want to make sure that when you are getting the information from these grants, scholarships, fellowship, that you are reading the rules and you are understanding what's at play because a lot of people, when they apply for these grants or these scholarships, they don't realize that by the time they file their tax return the following year, they got a form, a tax form, and with that tax form, unfortunately, you have to report that because that's already being reported to the IRS. And the IRS or even the state tax agencies are just waiting for you to confirm that you did indeed receive that money and that you are reporting it on your return. If you fail to report that information on your return, it's going to lead to a discrepancy where it can result in them sending you a tax notice where they're letting you know, hey, we have found out that you have received an income that was reported by a third party that you did not report on your tax return. So we're going to go ahead and we're going to adjust your tax return. And when they make the adjustment, they're going to then send back likely a tax bill because you have to pay taxes on that income that you did not report on your return. Sometimes it could lead to an audit as well. And when you are under the eyes of the IRS and they're already asking for you to produce documents and you don't not have that information, especially during an audit, it is going to cost you a lot more than what you had anticipated. So you want to make sure that you're fully prepared to have everything that you need in order to report an accurate tax return. Um, I know I sound a little repetitive over here, but again, just can't stress this enough. Like, when you do receive this income, you want to ask yourself and continuously ask yourself, like, what is this fund used for? Again, if it's used towards tuition, fees, courses, books, if you had to travel abroad because you that's part of your research or part of your curriculum, again, we want to make sure that with that that fund is being used towards those items because again you won't be subject to paying the taxes on that, but if you end up using it for any personal usage, then it becomes taxable. Now, how does this income get reported? So there are several tax forms that you will likely get. Um, so for one, you might get a 1098-T from your tuition. This usually occurs when they report the tuition payments that you made towards the school. I always tell people, especially when I'm doing their tax return and they're students or have been former students who had just wrapped up their last year in grad school or undergrad, I would ask for a 1098-T because when you have made payments towards school, we want to see if you'll be eligible for any credits that may be applicable for your situation. Another form that you make it is either a W-2. So sometimes this is usually like with stipends that I've seen time to time when they're paying you a monthly or quarterly basis, they'll usually have you fill out a W-4, and then within that W-4, they will issue you like a paycheck, and that will be reported as W-2 income. If you also happen to do any other type of work for the school, for example, if you become an employee because you became a teacher assistant, or if you end up being an RA, I think it's now, back in my time, it used to be called residential assistant. I'm not sure if that's still the same phrase. But if you are employee under the institution, then you will get a W-2 because they are paying for your services to keep up with with the type of services that you provide within the institution. So in this case, if you're teaching a course or if you're monitoring the residential buildings to ensure the student safety, they are seeing you as a worker. Another tax form that they also provide can be a 1099 NEC or a 1099 miscellaneous. This type of income is more treated as an independent or a contract income, and this is where you will either file a Schedule C or a Schedule 1. It really depends on the situation. So, for example, if you were issued a 1099 NEC, what I usually will tell as students is that did you incur any type of expenses during your time researching? It could be that you had to, for example, if you had to utilize your phone to make calls because you had to conduct a survey to the public, then that can be an expense. If you happen to drive to, let's say you had to drive to a laboratory because the one at your school does not have one or does not have the specific need that you need to utilize in order to conduct your research, and you have to go to a laboratory and you had to like, book an Uber or you had to take the city bus, that can be an expense. If you had to purchase additional materials or books, that can also be deductible as well and can be applied towards your 1099 NEC. Again, this is a case by case, so I would always recommend that you ask your tax person, that letting them know, hey, I received this 1099 NEC. Am I eligible to deduct some of the expenses that I had incurred towards this research or towards this program that I was in? If you don't ask those questions, or if your preparer, when they're reviewing this information, does not ask you what your role was, or how did you land this type of income without asking, or asking any further question, this is usually usually my point where you were just need to get a second opinion, because when a professional is not asking you all the information, that just tells me they're not doing their due diligence part. Also, they just probably are just seeing you as another figure walking in and out of the door, and I don't ever want someone to feel like that, especially when you are already paying for a professional to provide you clarity and guidance on these tax returns. Um, and last but not least, as well, is that if you do not get a tax form, just know that you, as a taxpayer, are still responsible for reporting that no matter what. Uh, Now, some people might just say, Sonia, well, if I don't get a tax form, well, then they don't really need to know what I do with this income. Here's the thing. If you end up getting audited by a tax auditor from either the state or the IRS side, and you tell them that, well, I never got a tax form, so I didn't think it was important for me to report this information, just know that you already dug yourself a bigger hole by pretty much letting them know that you failed to report a specific income on your tax return. And to them, that's called a tax invasion. And obviously is subject to prison time and additional fines and penalties. So that is the last thing that you want to do, is lie to them about you not disclosing this information. And again, this is why, as me as a professional, when I'm working with students, that I'm asking all the questions. I'm not doing it just to be nosy. I want to make sure that I'm protecting you and preparing you for a potential audit that may come your way. And I always tell people, there is no guarantee for you to avoid an audit. It just happens to be that the agents tend to select certain tax return at random times. But again, you want to be fully prepared. I always tell people, for your return, we have to be audit ready. So we have to have all this information at play, making sure that we have it in our, at least in my end, in our system. So in case they were to question what's on the return, we can provide them all the information that they need to ensure that you are as a taxpayer, reporting all the information, especially the income, as you should by law, to know that you're not trying to hide anything. And if you show them that you are hiding something, they're going to dig in deeper. And the last thing you need is them snooping into your financial activities, right? So again, any form or any income in general that you have earned has to be reported on your tax return. Oops, let me go back. I know there's probably some questions and I can't seem to see the chat right now, so I do apologize. I will address those at the end, but we're just gonna keep going. All right. Some of the misconceptions. Again, we already touched on this. The first one is, if you don't get a form, you don't need to report it. That is false. Again, the last thing you want to do is be locked up for tax evasion because you did not report or disclose all of your income on your form. Okay. It's If you decide that you want to take that risk by saying, like, well, I never got the form, so I'm not going to report it, that is a risk that you're taking, and that is on you. Okay, don't ever blame anyone else. And I am advising you that I would not take that type of step, because again, I have seen things, and the last thing I would want, especially you young folks out there who are literally going to school to get your degree, you don't want that to go to waste and be put up and locked up in an orange jumpsuit at a jail cell. Um, Another misconception that I hear time to time is the scholarship is always tax free. That's not always the case. If the scholarship is used towards the qualified expense, again, such as the tuition, the books, the materials, any fees associated with the tuition, then yes, it is tax free. But if you use it towards any personal expense, then it does become taxable. And then another thing I hear is that the schools handle your taxes. I will say this, the school is responsible for reporting the income, the information to the IRS. Okay. But it is your responsibility to report that info on your tax return. I can't stress this enough. The school is responsible for reporting the information that they have received in terms of your scholarships, the payments that you made, to the IRS. But it is, again, your task to be reporting all that information on your return because the IRS, it holds you highly responsible for inputting that information and tracking it and reporting it correctly. And if I understand that with the taxes, it can be very intimidating. And that's why I encourage you, if you feel like it's too much for you to take on or for you to handle, work with a professional. I know that sometimes investing in a professional may not be a budget for you, but I can tell you this. I know for me, when it comes to my clients, I give them peace of mind knowing that I am available year round. There are a lot of professionals out there who are probably available from January to April and they dip, okay? And if that's a professional that you are working with, I would probably proceed with caution just because if you have something going on later on in the year, especially let's say after the semester is over and you're taking the opportunity to apply for scholarship for grants during the summer and you finally hear back from these third parties stating that you got something, but you want clarity, you want somebody to give you some guidance in terms of, okay, I received or I have won this grant or this scholarship, how should I proceed with this? I want to make sure that I'm prepared for before the end of the year. I I always available for my clients when it comes to that because life is life and a lot of good opportunity typically happens, especially during the middle of the year. So when I have students who have encounters this type of situation, they reach out to me. They let me know that, I mean, I congratulate them when they win something big, but I always remind them like, okay, based on the requirements, we have to make sure that we're reading the rules and that if it is becoming, if the type of income that you're receiving is taxable, let's just make sure that we are setting aside a certain amount, so that by the time, before I typically say before the end of the year, let's make an estimated tax payment based on the information that you have presented to me to ensure that you're not caught off guard by the time you file your tax return come January, February of next year. And again, if you have a professional who is usually not available during the middle of the year or towards the end of the year, I encourage you to find someone different, okay? If anything, reach out to me because I will definitely help you out with that. And I will definitely reassure you that this stuff is going to be something that you're going to be very thankful knowing that you have someone like me by your side and giving you that guidance and clarity and reassurance that I have your back and preparing you for the unexpected. Now, and when it comes to the preparation, especially when it comes to all of these opportunities, the income opportunities that you've received, what I do encourage, especially now, okay, especially now, is that when you receive these type of incomes, I will encourage you to set aside at least 10 to 20% of it. Keep it in a high yield savings account. Okay. Let that money that you already set aside, let it produce more income. Okay. Even if it's $5 that you receive in a high yield savings account. And why I say put it in a high yield savings account versus a traditional savings account is, well, a traditional savings account give you literally pennies, like less than 1%, while a high yield savings account are usually around 3 to 4%. So it's a little bit more than the brick and mortar one. So there's so many high yield savings account online, such as Ally Bank, Charles Schwab. There is Marcus, there is Betterment, there is Wealthfront. American Express has opened one not too long ago. for high yield savings account, I encourage you to like look into those bank institutions because if you're already going to be setting aside money, knowing that needs to be paid off in terms of your potential tax liability, have that money make interest out of it. If you put it in a brick and mortar, that's fine too, but just know that you're kind of like giving it a waste, knowing that you're only probably going to get 1 or 2 pennies a month, maybe even that. So again, that's one of the suggestions that I recommend when it comes to planning for the income. Another one is track how you are using your funds, okay? You want to make sure that the expenses, you're classifying them, whether it's towards tuition or if it's towards rent, because again, you want to be audit ready. And when you're audit ready and you have this information ready to present to a tax auditor, you just look more credible and more trusting knowing that you were tracking this information. You track the income, you track the expenses that should have been used towards the qualified expenses. Um, I always tell people how to track your income or your activities is through an Excel spreadsheet. It's easy. So whenever you get paid and whenever you have to use that money towards your expenses, just make a note of it. You know, have a date. Usually the column in an Excel sheet will usually be having a date, the amount, and then the category. So that way it shows the auditor how this fund was used. And then last but not least is keeping records, okay? So not just an Excel spreadsheet. You want to make sure that you save the receipts as well. If you have, I'm sure these institutions have statements that they provide to you, so save those as well, because it shows the auditor the payments that you made and what the expenses were on the actual statements. And then any award letters that you do receive, you want to make sure that you're saving that as well, because auditors will typically ask for the details of the grant or the scholarship that you receive. And if you give them just based on your word and you don't provide them the actual letter, they might not take that very well. So you want to again be you want to be presentable and be audit ready when it comes to providing that information to the IRS. And then, as always, any income that you receive, any paycheck that you get, just know that if there's no taxes on it, you're still responsible for withholding your own taxes. So, how can you avoid these type of penalties or interest, right? So, here are 2 things. You can avoid these type of penalties by you making an estimated tax payment, meaning that you're making an advance payment ahead of time before the end of the year. And typically, people who have to do this is with people who have earned income but have no taxes withheld. So this is where the IRS does advise you that if you are earning income and there's no taxes withheld, that you make a quarterly payment if you can. A quarterly payment typically falls around April, June, September, and January of next year. Another thing to keep in mind is that if you do have taxes being withheld in other incomes, but your bill's over $1,000 or is expected to be over $1,000, again, this is where making an estimated payment is highly, highly encouraged, just because by the law, if you have anything that's even if it's $1,001, they will still penalize you because you underpay in that year. And what happens is that when you miss or you fail to make those estimated tax payments, the penalties, it's already high. That's already starting. I believe, if I'm not mistaken, the penalty itself is already 8%. That's the starting one. And then the interest is 7%. I know the interest tend to go up and down depending on the economy, but that's already steep. So when you add those two, that's already in like the what do you call it? In the high four-figure mark. So you just don't want that. So again, I'm sure some of you guys are probably wondering, well, how am I supposed to know like how much to set aside? Well, again, the general rule is 10 to 20%, but if you can find a tax professional who does tax planning like myself, what I do is I review all of your income that's coming in in that year, and then I'll calculate what your potential tax liability, and then review if you have any tax credits, meaning like if you already made payments through, like, let's say you have a part-time job and you're making tax payments already, I will apply that as a credit towards what I think your liability will be. I will also see whether or not you qualify for the educator credit. And what that is, we'll talk more about that, is pretty much it depends on your income. The education credit is, there's two types of credit. There's the American tax credit and there is the lifetime credit. If anything, I'll go right into it. The American Opportunity Credit. This is for undergrad students. So if you're in undergrad school for the first 4 years and you are a student at least half the time, then you can qualify for up to 2,500 in this tax credit. And this is helpful because let's say your bill was $2,000, but you qualify for $2,000. It's a wash. That means that you don't pay anything because your credit pretty much covered for you. Let's say you end up with a bill that's $3,000, but you did qualify for 2,500. So instead of you paying $3,000, you only end up paying $500 because your credits cover majority of that tax bill. For the lifetime learning credit, this is towards more for graduate students. If you're enrolled and you're doing, you're still enrolled, I believe it's still half of time. You can qualify for up to $2,000. And this is after you complete your undergrad program. So these are the two types of credit that will help in terms of either reducing your tax bill or pretty much paying it off completely so you don't have to pay more out of pocket. Um, in terms of federal and state taxes, so I just wanted to give you a kind of like what the difference is between these two. So for federal taxes, this is pretty much on the IRS level. The IRS pretty much have full control of the rules. They typically will have you file a 1040, which is your personal tax return, and that is where you would apply or enter in your scholarship and or any other type of income that you've received. And then what happens is that um, within those forms, if you end up getting one, we will then determine whether or not you qualify for those education credits to help reduce that bill, or help you boost up that refund if they end up seeing that you had overpaid in federal taxes. With state, so state varies. Their rules are very, very different. If you happen to, like, let's say you happen to live in Florida or Texas or Nevada, you don't have to worry about state taxes because you guys don't file a state income tax. But other states are very different. I know here in Connecticut, the only thing that's taxable, if I'm not mistaken, in Connecticut is the stipend one. But if you do receive like scholarships or fellowships, those are exempt. I know New York, if you receive a tax form and you happen to receive scholarships or fellowships or any type of income, but you have stated that it was used towards tuition, then you will be exempt from paying the state income tax on that. But if you end up saying that, hey, I use a portion of it to pay some of my personal expense, then you have to pay the state income tax. And I mean, New York itself already is at 8%. California, I think, if I'm not mistaken, I think their tax rate right now starts at 6%. So it adds up. It adds up. But I always tell people, like, when you're working with a professional, always check with them and make sure that they understand what the state rules are because it could be different from the federal law. Other than that, oh, I do want to mention this too. When it comes to the education credit, right? So how that works is when you receive, especially the 1098-T for tuition, what happens is that that form reports the grants or scholarships that you have earned on that form, but it also shows the payment that you made as well. What happens is that you cannot double dip. And what I mean by that is you cannot say, oh, I pay $18,000. But did you really pay $18,000 or did a portion of your scholarship pay for that tuition? So, for example, let's say on that 1098-T, on the first box, it says tuition payment was $18,000, but on the second box, it shows scholarship fund $8,000. Technically, out of pocket, you only pay $10,000 because $10,000 minus $8,000, I mean $18,000 minus $8,000 equals 10 grand. That shows the IRS that you technically paid $10,000 out of pocket after your scholarships kicked in. And so that is where they will allow you to apply the credit because you did technically pay out of pocket. But let's say the scholarship let's say your tuition payment was $6,000 and you receive a scholarship of $6,000. It zeroes out. So that means that you pay nothing out of pocket. So you cannot technically claim an education credit because your scholarship pretty much cover for all the payment. So you won't be eligible for this credit. Now, some people tend to do that anyway, where they will say, oh, well, I didn't have any scholarships or the scholarship didn't cover the full thing and they're trying to get the education credit. I would say proceed that with cautions because they see everything. The IRS has all the information. So the last thing you want to do is trying to force something knowing that you technically should not be doing that, because again you're falsifying the tax return, and when you're falsifying the tax return, that will typically lead to an audit, and then when they get audited, that's when they start finding out a lot more than what you shouldn't want them to see. So again, we want to make sure that you're reporting an accurate tax return and you're working with a professional who is gonna stay in compliance and making sure they're doing their due diligence part and asking you all these questions. And if you are second guessing who you're working with right now, it doesn't hurt to get a second opinion. I do encourage you all, hopefully after this session to reach out to me to just have, just a free consultation just to see how I can help you with it and to ensure that you are in the right place and that you're not overstating something on your tax return. The final takeaway, um, long story short, is not all student income that you receive is tax free. Some of them may be subject to taxes. The usage really determines how it will be taxed. And even if you do not get a form from any of these third parties or these institutions, just know that you are still responsible for any liability and any income that should be reported on your return. And then plan ahead. You want to make sure you avoid these surprises, you avoid the headaches, avoid the tax bill shock, because I'm telling you, you'll walk in the following season knowing that you have someone like myself, right beside you, helping you, planning ahead, and making sure that you are guided in the right direction. But with that being said, don't guess. Please do not guess when it comes to your taxes. If you're unsure how to go about it or how to tackle it, work with a professional, invest in a professional. I'm telling you, sometimes some investing in a professional will really come a long way, knowing that you had clarity and that they had your back and they were looking out for the best interests of you, knowing that the return was complete to its fully and with accuracy. You want to make sure that you also understand the tax implication as well. And if you are having trouble having someone explain it to you in a simplified way, again, please find someone else, reach out to me. I'm more than happy to help you out. And it is never too early to ask questions, even before the tax season. And that's why I always have these consultations, these catch-up call with my clients, even after April, because you never know. Life is life, and for a lot of folks. But most of the times when I meet with my clients, they're always relaying to me good news, and they just want to make sure, hey, I got something big coming my way. I just want to make sure I'm doing this correctly. It's always good to have someone like that, just because, again, you don't want to come across with surprises when you file your tax return. But yeah, I mean, I understand that taxes was never taught in school. At least for me, it wasn't taught. But just know that when it comes to this subject, it is very easy to understand, again, with the right professional, someone like who will dedicate their time and, will be very patient when it comes to this. Because I myself, when I was learning the subject, the stuff was very intimidating. It was very scary. There has been plenty of times that I wanted to drop out of tax school, but I pushed through it because I know that I need to learn this because I know my community needs this more than ever, especially for first earnings BIPOC folks. Like this stuff, we were never given this type of opportunity. And now that there's so many out there who are trying to advocate for this, for financial literacy, I want to continue to be a part of that. And I really want to make sure that you guys do walk away knowing like, wow, that was something that I did not know. And I'm glad that she came and spoke this because now I know what I have to be looking out for and what kind of questions I should be asking. And also maybe start to proceed with caution when working with certain tax professionals. But yeah, I mean, other than that, I do appreciate your time for even taking the time to just discuss this with me. But other than that, I am gonna stop sharing, and I wanted to give you guys the opportunity to like blow your questions away. Oh,
Thank you again, Sonia, for being here on this valuable information. We thank you for your time in this very busy time of the year for you. And thank you, participants. I will stop the recording. Please feel free to unmute yourselves once the recording is off so that you can ask your questions. So I am stopping the recording.